You're in the Business Insurance Zone with me, Steve Savant, national insurance columnist and financial color commentator. This week on The Biz, the Hybrid Product Series. And on today's show, in our tribute to LTC Awareness Month, single premium life insurance and living benefits with special guest Joe Racich.
When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Well, welcome everyone to the Business Insurance Zone. I'm Steve Savant, your host. We're broadcasting live to a nationwide audience of financial advisors right here in Fountain Hills, Arizona, home of America's largest fountain. And with me today, hybrid expert and purveyor of all that is hybrid products, Joe Racich. Welcome to the show, Joe.
Hi, Steve. Thank you.
Joe, again, I said this yesterday and I say it again. I don't know of anybody in our independent channels that is so into hybrids like you are. I mean, you are into it, whether it's term, life, permanent life, whether it's annuities. You just see this as the future, and part of that is because you have been in marketing, and it seems like America wants packaged products.
Well, the bundled products, absolutely. And you know what, I had a situation where I could have used a hybrid type of product. So I know how important it is for the people out there, the consumers, to own some of these things. And again, it is a benefit. There's so many opportunities for agents to bring these products to market to the client. Let them know that these products even exist. So, you know, we talk about the middle market not being insured, right? We talk about the fact that, you know what, it doesn't make any difference if you're 65 or if you're 40. I mean, there's an opportunity there for long-term care. And when you think about affordability, everything comes together with these hybrid products. You know, it's marketable, and clients will buy it. It's affordable.
The number one issue with hybrids is if you don't use it, you don't lose it.
Right.
So if you pay out premiums, if you're in a life contract, whether you're in an annuity contract, you'll always keep it if you don't use it. And that, I think, is the big appeal to people, because even though they see 70% of Americans, right, are going to experience a long-term care event after age 65, it never happens to you.
Right.
See,
Yeah.
so we're exempt somehow. But that kind of gives you comfort that, hey, if you don't use this, you actually can still use it for the original reason.
As I said in my seminars, it gives the agent an opportunity to cast a larger net around his client's safety, financial safety and health safety. So, you know, it's just a great opportunity, and I think we're going to get into a lot of specifics for, you know, these type of products. And, you know, I think you have a lot of giveaways that you can let these agents know that they can get more information if they don't know about it. But they are a fantastic opportunity.
Well, think about it. Right now, today, we're talking about single premium life insurance, and especially with the low interest rate. I don't know how low it can go. I mean, we've been doing our update show for almost 4 to 5 months. I keep telling it can't get any lower. It keeps getting lower. We just locked down 3.5 at the time of a recording, 3.5%. Think for a mortgage, 30-year mortgage, 3.5%. I mean, unbelievable. Single premium life, people are now moving to some of these single deposits because the bank CDs aren't giving them anything. So this is a perfect time to say, why would I use hybrid products on a life insurance contract?
Well, I believe this, the number is $8 trillion sitting in banks and money market accounts. Wow. $8 trillion. So you, the producer, may have a neighbor, a coworker, a relative, a family member who actually has money sitting in these low interest rate environments. And you know, I always talk about, you know, if you're around long enough, things are cyclical. At some point in time, you know, the stock market was raging. People were making money that was like throwing a dart at a dartboard, and whatever stock they picked, they were making money. So you know what? They'll take care of all of their financial needs, healthcare needs down the road. Banks at some point in time, not too long ago, actually were paying 4.5%, 5% interest rates on their money market. But now it's the annuities, the single premium products, the single premium products with riders on them that are actually earning more interest than the banks are. Perfect opportunity. It's a cyclical time, and it's the time right now for single premium products.
When I think of the beginning of all this, you have to give heads up and a handout and a salute to Lincoln National, because they came up with MoneyGuard back in 1988. We'll talk about dating myself. And in 1988, this was kind of a new idea, putting some hybrid morbidity riders on top of a life contract. And remember, what I like about it is that if I have money sitting in a single deposit, yes, if I took access to that money, I'd have to pay taxes, ordinary tax, it's a MEC, but anything I don't use would transfer to my beneficiaries tax-free. And it was a very inexpensive, and the best part about it, you had buyer's remorse, you could hand the contract right back to the company with no questions asked.
But this product actually went through an incredible metamorphosis. I mean, back in the day in 1988, it wasn't nearly as good as it is today. The fact that it's an ROP, which means you put in $100,000 and you have, depending on your age, you've got $150,000 of life insurance in the event that you died. You've got some cash value built up in the policy. You've got a multiplier on that $100,000.
We'll talk about that
no
just to make
surrender
sure
charge.
everybody understands what you just said. First of all, ROP, return of premium.
Return of premium, thank you,
But,
yes.
but what about the multiplier? Now see, because this is the thing that we kind of skate by, you and I talk about all day long, but for all our producers, what is a multiplier in this regard?
Well, when you're talking about single premium life insurance, you're talking about, think about a deposit. You put $100,000 in the bank, you put $100,000 in the stock account, and then let's just say you have a long-term care event. That's exactly the amount of money plus whatever interest you earn or dividends or capital gains that you earned on that money to use for that. But what insurance companies have done is they'll take that $100,000, and again, based on your age, they'll double the amount. They'll triple, maybe even in some cases quadruple the amount of that you deposited in the event of a long-term care event. So even though you only put $100,000 in the account, in the event that you have an event, a long-term care event, they'll pay out up to double, triple, quadruple the amount that you deposited. And talk about the tax benefits of that.
Wow.
And the Protection Act.
And remember, I can turn it back in if I don't like it. I love that. Listen, we're going to continue to address single premium life with living benefits, and when we come back, simplified issue. Don't forget you can enroll in IULUniversity.com for the best training, education, and sales support when it comes to life insurance for retirement income.
You're listening to the insurance industry's #1 resource for products, planning ideas, carrier information, and interviews you can use. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Welcome to the Brokers Alliance Auction House. I'm Jessica Lopez, and that's Steve Savant. What are you doing?
I'm practicing my auctioneer skills for our carrier bidding process for our producers' substandard cases.
Steve means that we're packaging our substandard cases for underwriters with specific carriers that are known to specialize in certain health impairments.
There are really only a handful of competitive carriers in each category, and we've identified who they are.
It's all about securing the best possible underwriting offer by packaging your substandard case with the right carriers.
So let the bidding begin. Well, welcome back to the Business Insurance Zone. I'm Steve Savant with Joe Rasich. And remember, you can order today's giveaways at thebiz@brokersalliance.com. And what are we giving away today? Long-term care manual. We put this together. It's easy read, understanding. We've tried to make sure you could comprehend it on the first pass. And we also are sending out the long-term care consumer survey, which I think is a natural prospecting tool. I like it because you can use this with your clients and clients that you don't even know. And the next thing is the PowerPoint presentation for agent use only. It is a great educational tool. It'll put you in the game overnight. Hey, just a heads up, before moving forward with any of the ideas that we talk on the show, always consult your tax advisor and broker-dealer compliance officer. In this segment, we're continuing our talk about single premium life insurance with living benefits. And Joe, now we are putting on top of all that simplified issue.
And quick.
And quick.
Yeah, the phone interviews. I mean, an agent could talk to a client and say, look, let me ask you something. Will your $100,000 or your money in the bank or in a stock account, will it give you a multiplier? Will it pay out benefits to you tax-free? Questions that you can just ask your client, friends, neighbors, or whatever. It's a great opportunity, and it's building. So you don't have to take the entire amount of money from a person's stock account, or take 50. The average ticket, I think, is $75,000 with a lot of these carriers, and more carriers are coming out of the woodwork with these products. Why? because there's a need for it, and it's growing. I think you mentioned MoneyGuard. I think they're having their best years.
And when you think about it, consumers want bundled and packaged products. They just do. It's convenient. They go to a single shingle place to buy their needs for their long-term care. And the best part about like this now is now we're moving into not guaranteed issue, but simplified issue, where I can actually not have to worry about peeing in a bottle and drawing blood. I can actually, over a phone interview, most of the time, get this done. Now remember, there's a few knockout questions, and if they find them, you may still want to go through full underwriting, but most of the people that we're showing this to are going through what I used to call, I don't know what they call it today, Joe, but I used to call it jet issue.
But it's kind of cool because, and again, most of the people are getting approved, but not everybody.
Right.
But there are other products with some hybrid attachments to them, annuities, that almost act the same way, and even easier underwriting.
When I think about it, here's just a few, and I just want to talk because there's so many single premium life contracts out there right now, and we mentioned MoneyGuard. I don't want to mention too many other ones just because, first of all, they didn't pay rent for the show today, so that'd be the biggest reason. Hey, the big thing I want to talk about though is we're looking at different morbidity riders. Now, Joe, I noticed that on some of these, and I have several in front of me, some of them cost nothing to the client.
That's right.
They're absolutely free riders, and I don't understand how they can pay for stuff like that.
Well, these actuaries, they come up with stuff, right? They sit in their little box and they start, putting the numbers together, and they realize that they're able to accelerate the death benefit, put the double and triple multipliers on there for the benefit of the client. These products are built. Again, I'm sure the insurance companies are figuring out a way to make money. They wouldn't have been around for 150 years if that's the case. But it's so powerful for the client. And these riders, like you said, some of them are free. Some will charge you maybe $250 just to activate it. What's that? You got a $60,000 long-term care bill, and it costs you $250.
Well, I'm looking at when we're beyond the traditional waiver of premium, accidental death benefit, and even terminal illness accelerating the death benefit rider, which has been around now for almost a decade. But now we're adding catastrophic events. We're adding chronic illness events. I mean, Joe, we're really stacking on one big mortality chassis several of these morbidity riders.
And again, if you don't know about these programs, I think go call Steve. Go to www.thebiz.com. I don't know the.
Yeah, we always, anytime you say, I heard this, you guys are talking about it, send me information. Just write me at thebiz@brokersalliance.com.
Again, so you as a professional, insurance professional, have the opportunity to really do a great job for your clients with all of these riders. Again, we talk about the banks, we talk about the stock accounts. They're not going to do anything. There's a lot of old annuity accounts that are out there that they have 10% free withdrawal capability, and these single premium products, even though they're called single premium products, they allow 5-year pays, 10-year pays. So you can take 10% out of your annuity, right?
All right.
And actually deposit it in this, and you have immediate death benefit, you have immediate multiplier, you have some additional cash value. So yeah, there is a tax situation, but it's minimizing it. Again, it's just taking your portfolio and making it better.
Keep in mind that if you have an old life contract that's sitting around that has cash value, remember, you can do a 1035 exchange to one of these products that have these riders already built on their chassis. You can conserve your gain, you can 1035 it over into the life contract, and there'll be no taxable event. Now, keep in mind that from carrier to carrier, and some carriers aren't all on the same page on the tax issue, on benefits and so forth. Each carrier is going to be different. That's why you need to do heads up and make sure you're getting what you're saying to the client is correct.
Well, that's why the guru, Steve Savant, is there to help you out. And actually, I know a lot of advisors call you up and ask for your advice.
Right. In fact,
which product is the best one to go to?
And what we try to do is we try to spreadsheet and be as mercenary as we can. We never look at one over another. We're trying to figure out what is the best consumer deal, what makes sense for the client, and what are the economics. Does it really make sense to do this deal? And let me tell you, hybrids right now are so hot, and life, especially 1035 exchanges from old contracts a lot of people are just going to throw away or just cash in. Now they do double duty, death benefit and LTC. Remember, you can watch this show and all our shows by clicking the red On Demand button right on our homepage at brokersalliance.com. Well, that's the Buzz on the Biz for today. You've been in the zone, the Business Insurance Zone.
The Biz is brought to you by Brokers Alliance, a national leader in insurance products, support services, and educational workshops. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.